Here's your step-by-step guide to buying a small business. You might want to hit that save button because we're going deep on this one. First, you need to take stock of the money that you have for a down payment and your skills and your interests and how involved you want to be in the day-to-day of running your new business. Next, you want to start searching popular business sites like BizBuySell or BizQuest to see listings in your area or if you're willing to relocate nationally. Now, you typically want to focus on newly listed businesses. We like to make contact with the broker or the seller within the first 24 hours. Typically, I feel like we're wasting our time with older listings. So you want to make sure that you're getting to it right away. Now, if you find something you like, you can run it through our debt service ratio calculator at owneractions.com/DSCR. Totally free. We don't even ask for your email. And then if that deal looks like it can work based on those numbers, then you reach out to the broker to dig a little deeper. Now, when you're reaching out to the broker, this is a sales pitch. You are selling the broker on why they should let you look at this business, why they should let you talk to the broker. You need to be able to demonstrate that you have the ability to reach the finish line, that you know how to get this deal closed, that you have the right team in place. You need to show them that you have the right skills to run the business. Because if you just show up and you just say, hey, I'm interested in this business, send me information, you don't include that sales pitch, they'll probably just ignore you. You need to sell yourself to get past the gatekeeper. So after you get all the information, you need to model out the cash flows again to see if this deal can work. If you're using our DSCR calculator, after the step one, we just have a more detailed version. Just click the button that says enter information provided by the broker. It'll take you to a little more detailed version of our DSCR calculator. Then if it still looks good, now it's time to schedule a call with the seller. Now you're gonna want to cover a wide range of topics. The most important things to cover during that call is you really want to learn what the day-to-day is of the sellers. How many sellers are there? How many people do you need to replace? How are their salaries treated in the numbers that were provided by the broker? And then one of the most important things is you need to figure out the working capital needs. So you want to really understand the cash flow cycle. So that's when money comes in and when money goes out, and that's going to come into determining the working capital that you need to run the business. And also those are going to come up in the process with the underwriter at the bank. They're going to spend a lot of time on that particular topic. Now, if everything checks out, you want to put in a non-binding letter of intent that says that you intend to buy this business, lays out the general terms. It's not a legally binding contract. Anyone can exit this at any time, but essentially you're negotiating the big things. So price, the seller's notes, anything that's really important, if inventory is included, just the big high level factors. And of course, we can look at your structure through our review service if you need help. Next, you need to start reaching out to banks and trying to find a lender. I know this can be a little intimidating. It's hard to get a hold of a banker that can do deals in this space. If you need help and it's above $500,000, reach out to us. We have a complimentary service where we can match you up with a lender. So once you find a lender, they're going to give you a list of items that you need. The most important are going to be the tax returns for the business you're buying. They're also going to ask for your tax returns. They're going to ask for your personal financial statements. They're going to have you fill out an application. They're going to run a basic credit check. And after reviewing that information, if the deal looks good, the bank's going to issue a term sheet. Now, a term sheet's just going to give you the broad overview details of the loan, the interest rate, the term. It's going to lay out some things that they might need through the underwriting process as well. Now, most banks with that term sheet, they typically ask for a $5,000 deposit before you get to move on to underwriting. Now, underwriting, it's a very detailed process. You're going to need supporting documents for everything. So you're going to need to show W-2s to add back the seller's salary. If they had any personal auto expenses, we're gonna need to see exactly where that went. We're gonna have to prove out every single thing within the financial statement. So we're gonna get into a lot of detail. You're gonna have to write a business plan with detailed projections. Again, that's a service we have. If you need help, reach out, we can do that for you. But they're really gonna wanna ask and test how well you understand the business that you're buying. Like I said, they're gonna focus on that cash flow conversion cycle that we talked about with the question with the seller. That's going to be kind of one item that they focus on to make sure that they know that you really understand the business that you're buying. So while you're in underwriting, you're going to need to have your legal team start working on the legal side of the deal. So typically they'll do some legal due diligence. They'll make sure that the seller is actually legally authorized to sell the business. There aren't any trademark infringements. They'll have a long checklist of things that they'll go through. You're also going to need several documents. The most important are the operating agreement. That's the document that governs the legal entity that's doing the purchase. The asset purchase agreement, that's the contract between you and the seller. They'll also put together things like bills of sale. They'll put together the promissory note, which shows the details of the seller financing and other documents that might be needed to complete the deal. So when underwriting's done, and the underwriters give their package to the credit manager or the credit committee, and they finally give the ultimate approval of the loan, then the bank is going to issue what's called a commitment letter. And now this is really similar to the term sheet, but it's a higher level of commitment. Obviously, in the term, the bank is committing to do the loan. They've done their due diligence, and they think this is a good, viable business to invest in. So at this point, again, you're gonna have to make another $5,000 deposit, and then you're going to move on to closing. So typically with closing, then you'll have a call with a closer at the bank. They're gonna lay out everything you need. Now this is getting really detailed. They're gonna need the titles for everything that may need to be transferred. They're gonna ask for all those legal documents that your lawyer put together, all the schedules that the seller's attorneys are going to put together as a part of the deal. Really detailed to-do list or items that you need to deliver to the bank at this step. You're also gonna need to go and get insurance. A lot of times when there's a transition, you have to go and get new insurance. So you wanna find out what policies the seller already has and go and get like policies. You have to get through the SBA, you're gonna have to get life insurance. So there are certain life insurance providers out there that specifically work with SBA loans. You have to get a life insurance policy that's equal to the difference between the loan value and the asset value. So basically you have to cover the goodwill or based on the level of collateral that you're providing. And then once you've delivered all the items from your closing checklist, then you get your closing date. Now closing, it's gonna feel a lot just like a mortgage signing, big stack of paper, you're gonna have to sign a bunch of times. It can either be done in person or virtually. And then it's time for the real hard part. You're the proud owner of a new business and you gotta go in there and run it.